Thank you for the opportunity to talk with you this evening. I've been with Celerity Credit Union for nearly 10 years now and made a career working with people, helping them with their financial issues and questions and loans and things like that. And one of the things that's been the most rewarding through my career is helping people with car loans and home loans, because those two things represent dreams people have, being able to have the things that you really want in life and enjoying your life. So that's something that's a real big deal to us here at Celerity as well. Celerity is a local credit union here in Yakima, one of the few and definitely the biggest. And we have been around as Celerity now for just over 10 years, I think, somewhere in that neighborhood, and have been helping people with those dreams of car loans and home loans for all that time, and happy to be here to help. So Bertha is right. I definitely will have some questions here and there, and we have a couple anyways, $10 gift cards to Starbucks that we'd like to give away. So if you are the first one with a correct answer at the particular time when I've got a couple of questions, I'll have you put your name and your email in the chat and we can shoot you out a gift card. So be paying attention. And also open to questions. I'm going to make periodic stops and ask if anyone has questions, but if you have some burning thing you don't want to forget, hit the chat and I'll hit it as quickly as I can as we're going through there to make sure we get everything covered. So welcome to the discussion. Let me share my screen. We'll get the presentation up here. All right. Everyone see the big orange Celerity Credit Union car loans coming through? Good. All right. Well, car loans are a big deal. Just out of curiosity from the group out there, and you can do it by showing a hand on the on an emoji if you'd like, but how many of you own your own car? See if we got folks that aren't shy. Oh, I see one, two. All right. Ooh, yep. There's a few out there. Okay, so of those of you that own your car, how many of you have a loan on that car? See if we get any more. Okay, we got one, two. All right. Not everybody has to take out a loan. Sometimes we're able to save money and buy things in cash, or we inherit it or get it some other way. So that's great. But I'll tell you, that new dream car, when it comes up, the first thing that we're all thinking is, how am I going to afford that? Well, let me start by talking a little bit. Let me see if I can get my buttons working. There we go. The most important thing that I'd like you all to come away with when you're thinking about buying a car is establishing a budget. It always seems like, and I will be the first one to admit, when it comes to buying a car, I lead with my heart and I'm after that car, and I'm not thinking about how much it's going to cost me right up front. But being able to let our brain lead a little bit and have some ideas about the budget that we need to have will make a world of difference when you're putting together the deal and actually pulling down that dream car that you want. Some important things to consider in that budget. Sometimes when you're buying a car, you have to have a down payment. There are some car dealers that can finance cars and some lenders that will do it without a down payment. But a lot of times car dealers and lenders want to make sure that you've got a little skin in the game, that you've actually contributed part towards that car. And that could range anywhere from a few $100s to maybe a few $1,000s. One of the other things that people forget a lot of times is you also have to put aside money to pay for your car insurance. And when you're out there buying that new car, sometimes that doesn't pop into your mind right away. And when you finally get the car insurance going, you're thinking, oh boy, that's a lot more than I was thinking. Nice to kind of know up front just what you're looking at. And then maintenance. Now with maintenance, it's nice to have cash put away in your savings account if something goes wrong with your car. But also when you're buying a car, there are certain things like extended warranties, purchase protection plans that you can purchase that can help you with some of those costs. And it's smart to look at what some of those can cost you and what they can do for your vehicle in case something goes wrong. It might cost a little bit of money up front, or you might have to have a slightly higher loan payment in order to afford one of those. But it could save you thousands of dollars if you have a problem down the road. Anyways, I think we got a question right up here. Where would you recommend checking your credit scores? Great question. Credit score is something, I've got a little part right here. I've got another area too where we'll discuss it a little more in depth, but credit scores are something that can cause a lot of confusion out there in the marketplace when people are looking for loans. Every place you go to check, you can go online to one of the credit score reporting places. You can check your credit report directly. You can go to get a loan, but it will always seem like you're getting a different number from every different source. And my main recommendation on that credit score, wherever you get it, online places can be great, provide that at no cost. Credit card companies provide it a lot of times at no cost. Don't get so caught up in what that number is. What you want to do is track that number and give it some time to see what direction it's going. If the number is going slightly upwards or greatly upwards, that's nice. That will tell you that your credit's improving. If that number is staying the same or maybe going down, that could be a bad sign. You need to look a little deeper into it. So don't get so caught up in the number as much as what direction that number is moving in. And yeah, where you can find it, there's lots of places out there. Does that help you with answering that question? It can't be too specific. There's just too many places to mention out there, but several online. If you have a credit card, that's also a good place to check.
I think Nevaeh had a question. Was that Nevaeh's question? I'm not able to see the chat.
Yes, okay, that was my question. Just where would you recommend? Because I've tried Credit Karma and Experian, but sometimes they want more money to like check other sites. And you're correct, I do get different answers from different places. I've gotten a credit score back from Spectrum, so I'm curious.
Yeah, if it was me, honestly, the best place to do it is if you don't have one already, get a credit card. Okay. Even if you use it very sparingly, those can be the best sources because they'll report to you every month for no cost what your score is, and they'll give you advice on why it is the way it is and what direction it's going. So that's the best place. The other places are great, but yeah, they can sometimes cost, which is kind of a bummer.
Thank you.
Does that help?
Yes.
Good deal. And it's a great lead in there because really having a handle on your credit report and your credit score is obviously a big deal in being able to afford the vehicle that you're looking for. If your credit score is low, that can be very difficult to get financing, or you might have to bring in a lot more of a down payment versus if it's a little higher, that could make it a lot simpler to qualify for the credit in the vehicle that you like. A good way to not only track but improve your credit score is to do something like a credit card or a personal loan. And I know there's something going on tomorrow talking about credit cards, so I'm not going to go very deeply into that. But they can be a great way to use credit and by repaying it to demonstrate that you are able to pay that credit that you take out. And those are the two factors that really influence your credit score and your credit report in general the most. How you use your credit and how you repay it. Those are big deals, and those can really help. If you are having a little bit of a problem because you don't have much credit built yet, or you don't have maybe as much income as you'd like to be able to get the car, sometimes a cosigner can help as well. And a cosigner is usually going to be someone close to you, a mom, dad, brother, sister, someone that you know really well. And they can come on with your loan application and help to offset a weakness that you might have in there to get that vehicle. Bear in mind, bad credit is difficult to overcome, and even a cosigner may not help as much with that. So if you've got some credit issues out there, it's best to handle those head on and see if you can get those taken care of and offset to help you as you're putting together that credit. I think I covered all of that. What questions you guys have about credit scores, budgets?
I have a question.
Sure.
Andrew. So you talked about if you have bad credit, what if you file bankruptcy? How does that work?
Well, bankruptcy, it's usually the last resort that folks have when they've got some serious money problems, but it isn't something that can't be overcome. It's actually, lenders do look at it pretty seriously, but it's also something that lenders know it's a fresh start for you. You no longer have any debt because you've just been able to get rid of it in a bankruptcy, and you're starting fresh. So the most important thing to do there is to just reestablish using credit and demonstrating that even though you had a problem, you're on the path to making that better. And the best way to do that is to get maybe a secured credit card. You could put $500 into a savings and have a $500 credit limit on a credit card. Use it, make payments on it, and begin to demonstrate that your new credit is heading in a much better place than what happened before. And that's a good way to kind of get back on your feet after you've had a situation like that. That answer the question?
Yes, thank you.
Any other questions?
For people who are starting out with credit, how many credit cards would you recommend having at once? Should we just do one, or should we maybe have two, or what do you recommend? Or should they be Visas or like department stores?
That's a really good question. And again, I don't want to step on the toes of the next presenter, but I will say that getting yourself a major credit card can be very useful. Once you have that, that can help you get other cards, but usually just one card is all you really need to have to really start demonstrating that you can use credit and repay it. And the key is just being careful when you use it, not to spend money that you don't have. And if you can keep into that, it can be a really good tool to help you along your path to building that credit. Does that answer that for you?
Yes, thank you.
You are welcome. All right, we'll move on here to the next page. I'll click it down. Just talk real quick about the types of vehicles that you can get. Usually the two areas that you'll be going to find your vehicle that you're wanting to purchase, you're either going to look for a car dealer or buy it from a private party, which is just code word for someone who isn't a dealer. It could be a family member, a friend, or someone you don't know. The important thing to keep in mind with dealers and with private parties is you want to be very careful that you do your research. Dealers can be well established with a good reputation, and some of them can be newer and they don't have much of a reputation established yet. Ask around when you're shopping. Ask friends and relatives where they bought their car, and check out those dealers that have a good reputation. That way you know that you're going to have a reasonable expectation of a good experience. With a private party, this has in recent years especially become very fraught with scams. And especially from a financial institution, we really want to caution you to be very careful when you're making a purchase, especially from someone you don't know. A good indication of a scam would be someone that wants to buy a car or sell you a car and wants to send you money when you're not expecting it, or wants you to cash a check and then send them back money. Or maybe they've got a vehicle that isn't what you wanted that they'd advertise, but they're trying to talk you into something different. Any of these red flags should really make you suspicious that maybe something is wrong. And it's best to look into that very carefully. Get help if you need it. Go to your bank or credit union and have someone look at it with you. It's best to get some opinions on if something is legitimate or if there's some problems. You don't want to be on the backside of being scammed and owing money to people that you don't really need to pay. So be very careful with those. However, when you do have a reputable dealer or a very good private party, you can find yourself some really good deals. Good thing about working with a dealer, dealers a lot of times have relationships with several financial institutions, which allows you to shop around a bit. Sometimes you can find a better deal, maybe a financial institution that will need less of a down payment or a lower interest rate, which would mean a lower payment for you. Sometimes they can find you a more local deal. Like we like to work with our dealers here to help people to be able to buy locally and get their financing locally. And that can be an important thing to a lot of folks. With private parties, it can be sometimes difficult for the financing. Banks and credit unions sometimes have trouble getting titles, taking care of getting themselves and you added to a title from a private party, finding titles. Sometimes private parties lose them. And financial institutions can be a bit leery about actually doing those kinds of loans. So check ahead of time if you do have someone that wants to sell you a car that you know, and work with your financial institution to find out how they do those and what kinds of things you might need to do to get a loan like that set up. One important aspect of buying a car too is to pay attention to a new versus a used vehicle. A new car is it's like all of our dream, right? We all want that new hot car with all the new features and everything on it. No one's driven it before, and no problems and all that. One of the downsides of buying a new car, though, is there's always a price to pay to get all that new stuff and to be the first owner. And a lot of times, once you drive that car off the lot, you can lose a substantial amount of value in the vehicle just by making it not a new vehicle anymore. So you want to talk with the dealer and look at that. Sometimes a used vehicle makes sense for you, not only in the price, but you're going to probably pay a little closer to the actual value of the vehicle versus a new vehicle, which may cost you a bit more than what you actually have. And we sometimes will see that if someone buys a new car and then for some reason they need to sell it within the first year or so, sometimes it's worth less than what they paid for it. So it's good to look into that ahead of time to at least know what you're getting into, so that if something goes wrong, you at least are prepared for how to deal with that. And your bank or credit union is a great place too to talk to them about these types of things and what options you have. And finally, if you have a current vehicle and you're buying a new one, you might want to consider trading it versus selling in order to get a better deal on the vehicle you're buying from the dealer. Sometimes if you owe money on a vehicle and you trade it in, the dealer can make a deal on helping you get that loan paid off so that you don't have to owe anything on your old car. On the other hand, if you'd like to hold out and sell the car, you're always going to get the best price selling it yourself versus trading it in. Dealers still have to make money. They're not going to be able to give you the full value of your used car, but if you sell it yourself, sometimes you can really come out with a lot more cash. So it really kind of depends on what your goal is there and how quickly you want to get your vehicle. But another good thing to discuss with the dealer or your credit union representative or banker. All right, a lot of words for me. Any questions? Any thoughts on any of that?
I have a question.
Sure, go ahead.
So I've been through this process before. I'm currently going through this process with my bank, GISA, and so the car that I'm wanting to buy, they basically were telling me that when it comes to the taxes, they're gonna have to, I'm gonna have to pay the price of like what the car is worth, even though it's like not priced at what it's worth. Is that true, or is that something that Celerity would do as well?
So let me make sure I got this correct. So the concern is that they're having you pay taxes based on the full value of the car rather than what you're paying for it. Is that what you're saying?
Yes. So the car is worth about 14,000, but I'm only paying 9,000. So I'm gonna have to pay whatever the tax is on the 14,000 instead of what the tax would be on the 9,000.
I gotcha. That I know is very frustrating.
Mm-hmm.
And unfortunately, we have the Washington Department of Licensing to blame for that.
Mm-hmm. That's what they were saying. So I just wanted to make sure though.
Yeah, no, they're absolutely right.
Okay.
We've had a few private party sales where we have like parents giving a car or selling it to their child, or maybe a brother selling it to a sister. And the Department of Licensing still steps in and wants to make sure they're not losing out on their part, and they want to make sure they're getting the full value on that one. So unfortunately, that one is true, and it is something to be mindful of, no matter how you do. Yeah, good thing to bring up. Thank you. And I apologize, I haven't been monitoring the chat as well as I should have here, but I see Jessica asked, how do student loans impact the ability to borrow? That also is a very good question. Student loans usually have two different phases. The first one is the part where you don't have any payments while you're going to school. And the second one is usually once you're finished and you're starting to make those payments. Obviously, when you're making the payments on the loans, that counts right into your credit report as any other loan payment. However, if you're in that point where you're not yet making payments, sometimes the financial institution will look at that and put in some kind of a payment figure that kind of approximates what you might pay, just to ensure that once you are paying that we're not putting you in a position where you're going to be in trouble financially. Last thing we want to do is give you a car knowing that all of a sudden you're going to have student loan payments and then you're going to be in trouble. You won't be able to eat. Not a good way to do things. So we definitely look at that and look at what that impact can be, and decide on how that needs to be handled case by case. Does that answer your question, Jessica?
Yes, thank you.
Good. Okay. I'll try to be better on watching that chat there. Let's see here. Oop. Back over here.
I have two questions.
Go right ahead.
So my first question is, say you you own a car and you want to sell it to somebody.
Okay.
Can they get a loan through the bank for them to purchase that car?
That is a wonderful question. And the answer is it depends. Some banks and credit unions are, like I was mentioning, a little leery about making loans to private parties. And really the big question there is who has the title and is it in hand and easily accessible? Imagine this scenario: if you wanted to buy a vehicle from someone that lives in Oregon, and this person in Oregon says, hey, I'm not going to give you the title until I get a check. And the lender is saying, hey, we're not cutting a check until we get the title in our hand. That can be a little bit of a problem, and it takes a fair bit of negotiating if it can be done. Otherwise, if the title is easily established, like maybe it's a friend or relative that's selling it and they've got everything there, there's ways that we have around that. Sometimes the best way to do it is just have that friend or relative put the title in your name for the vehicle and have you, pay the taxes, whatever you need to do. Then once you own it, then we can make a loan on that car to you, and you can take the loan amount and pay off your friend or relative the amount that you owe them for that. So there's some ways to work around doing that. And again, if you have one that comes up, talk to your bank or credit union representative, and we can walk you through those options and figure out how to make that work. Does that help?
Yeah. And the other question is, say you want to purchase a car that that was wrecked and somebody fixed it. Can you get a bank loan for that car?
You can. Those are what we call it's a gray title, gray market, what they call that. You got a vehicle, it's got a title, but that title says damaged or totaled or rebuilt on it. And the first thing I can tell you that's going to happen is most banks and credit unions will probably only be able to loan half the purchase price on things like that. And again, wanting to ensure that you've got skin in the game and you're putting money down on those. The good thing is a lot of times, because of its history, the price that you're buying it for is going to be a lot lower. So it'll be a lot easier probably to come up with the cash to put down on that. But the answer is yes, there is some financing opportunities for those kinds of gray market type vehicles.
Thank you.
No problem. All right, let me jump ahead there. Rates and terms. The first thing I will throw out before any questions pop up is I really am not going to venture into quoting you what rates look like. Rates change quite a bit, and they vary based on the vehicle and your credit history, lots of different things. So if you really want to narrow down and figure out a rate that would apply to you, talk to your banker or credit union rep, and they can really get that quoted. But that being said, rates really are tied heavily to that credit report and credit score that you've been working on. So if your credit does need some work, that could cost you a little extra in payments through the interest rate. The good thing is, if you need to get that car, you can at least get it even if you're paying a little bit more. But as you improve your credit, you can refinance that vehicle usually pretty inexpensively and hopefully lower your payment rate as time goes on. So you won't have to necessarily have that big payment forever. But the better you can get your credit score going now, the less expensive that interest rate and payment can be for you. Also, one of the other things that can affect the payment that you've got is the length of your term. The average car loan is usually somewhere around 5 years, but they can go as far as 6 or 7 years out. Sometimes that might make the interest rate go up just a tad, but it can drop your payment and make your car more affordable in the long term. Just be careful to think that through ahead of time. If you're only going to be owning your car for a couple of years and you know it, getting a 7-year loan may put you with a lot more loan than you really need to have. So something to consider and think about before you pull the trigger on getting a loan like that. And one of the things here I forgot to mention right up front, a big one for you guys, pre-approvals. Now you can go to the car dealer and you can shop, find the car, they can get you the financing, and you can sign, walk out the door, and that works wonderfully. And we do a lot of loans for our members directly through the dealer. But something that can really help you is to come in and get a pre-approval. And all that really means is we're going to take an application, check out your income, check out your credit, and then we'll tell you exactly how much you can do in a car loan and how much you can actually purchase. So that way, if a dealer's coming in telling you, hey, I've got this $50,000 car, and you already know that you can afford, maybe 30,000 or less, you can say right up front, okay, let's not waste time. We know all about that. But it's kind of nice to know what kind of a payment to expect and how much that payment will buy you. So when you shop, you become a little more informed as a consumer and can work with the dealer a little more effectively. Any questions on that before I move on to the insurance? Cool. Just real quick on the insurance side, I'm not an insurance agent, so I really can't get deeply into this, but the one thing that I would recommend that seems to get forgotten all the time when people buy a car, talk to your car insurance agent. If you don't have one yet, find one. Talk to your friends and relatives and ask who they use and interview a few and find out which one that you really would like to work with. One of the things that you really want to know from your car insurance agent is how much you're going to charge me for insurance based on the car that I'm looking to buy. That can make a big deal of difference. If you're thinking, okay, here's the payment that I can afford, then the car insurance is going to throw another few $100s on top of that. It's something to really take into account when you're looking at that car payment. And then two, it's good to know what the insurance agent is really using to determine that rate. Is it mostly your age? Is it have to do with your driving history? There's lots of things that can affect that. And good to know up front what's going to do that. And then there's different types of coverage. You might find that buying a cheaper, maybe say a Ford Escape, might give you a much lower car insurance rate than say that Ford Mustang that really looks cool. So good to kind of know the difference of what it'll cost you based on what kind of car you buy too. One last thing that a car dealer or a car insurance agent can offer you is they offer a product called credit life insurance. And what that does for you is if, let's just say you become unemployed or maybe you get hurt at work and you can't work for 6 months or a year, it's going to be real tough making your car payments if you aren't able to work there. The credit life insurance will step in a lot of cases and make payments for you in those situations. And it's a great thing to look at ahead of time because it usually doesn't cost you very much. And you can sometimes include that in your monthly payment, but it might save you a lot of pain and suffering if something happens to your ability to earn money. So look into that with your car insurance dealer and your banker or credit union representative. And that might be a good thing to consider as you're purchasing. Any questions on that? Any insurance-oriented questions?
I have a question.
Sure.
So if you have a car loan through a bank and you are required to have insurance because the bank owns the car, is that correct? And so say you don't put insurance on that car, what happens?
Wonderful question. And it's very important to answer that one too, because sometimes car dealers are not really good at reminding you to immediately get insurance. And you might be so excited about your new car, you drive home and a month goes by, then 2 months goes by, and you never got that insurance set up. Well, the banks and credit unions do require that you have insurance on your vehicle from the moment you walk out of the car dealer. And what can happen if you don't get it is the banks and credit unions will find an insurance agent that will backdate insurance, or in other words, cover you in arrears, because if something, maybe you didn't even know that you hit a car, you bumped their bumper or something. If a claim comes through and you didn't have coverage, that could affect that car and the ownership position of the credit union or the bank. So they will put that insurance in for you. The problem is it's highly expensive, and it will become a part of your loan payment so that you can get that paid off. It's always in your best interest to shop ahead of time and be ready. So when you buy the car, you just call the agent, let them know I got it, and they can make sure that you have coverage from the first moment. Much cheaper, and it protects you too. You don't want to go out and have an accident. And, oh, I forgot to get coverage. Yeah, that won't end well in a lot of ways. So definitely something to attend to so that you don't have to have trouble later.
Thank you.
Cool. Well, real quick, moving on to home loans. There's going to be some similar things with home loans that apply to car loans as well, plus a few additional. But real quick, we had a video, and well, wait a minute, before I go any further, I can't forget that Starbucks gift card. Okay, here, before I start anything else, I'm going to ask a question, and the first correct answer I see on the chat will win a $10 Starbucks gift card. Okay, and they're not hard, but we're going to check and see if you've been paying attention. What is the first thing to establish before buying a car? What are your thoughts? Oh, already got one here. Let me click over there. Okay, we got good credit. We got credit scores. These are important, but it's not the first thing. Any other thoughts? I'll give you a hint. It starts with Bud and ends with Jet.
I think Yesy Solis put budget.
Oh, wait. Oh, yeah. I do see that one. Good job. Okay, we got it there. But I like all the other answers. You guys are all thinking down the right way. So it's Yesy, right?
Yeah, Yesy, you can send Andrew a direct message through chat, your email.
That'd be perfect. We just need your full name and your email address so we can get that to you. Good job. I apologize. I'm trying to read through here. It looks like I might have missed one question about scholarships. Just real quick, I'll throw that out. Zach, correct me if I'm wrong, but I don't believe Celerity is offering any scholarships at this time.
We don't. Yeah, we used to a few years ago, but we've kind of, I think it was just something that we kind of just moved away from. I don't think it had much interest at the time. So it was no longer something that we could carry. So yeah, short answer, no, we don't offer them anymore.
But do keep an eye on our website, especially if you're a member with us. We change all the time, things happen. So if we do offer some, it'll probably be posted up there for everyone to see in the community. So great question though. All right, perfect, thank you. Okay, so getting back, I was just gonna say, we've got a short 1-minute video. Buying a home and buying a car, like I said, it's all about a dream, right? I mean, it doesn't come from the desire of, okay, I have to have one. I'm just going to go throw something together. I mean, maybe that would come up if you really had to, but all of us have these dreams about our car and our home that we live in, and they're a big deal to us. So we have a snippet from our CEO at Celerity Credit Union, kind of addressing that, talking about her thoughts.
What you believe your life will be is what your life will be. What you believe you can do in your career is what you can do. So don't limit your belief, because then you limit yourself. I bought my first home in Southern California in the city of Monrovia. I rented a house in Pasadena. Actually, it was an apartment I rented in Pasadena, and I couldn't afford to buy it there. So I moved a few cities down. You know, one of the things that I think people find surprising is that I do cook, and I generally cook a meal for my family every night. A long time ago, when I became CEO, I decided that what I would not miss would be coming home, having a meal with them, and making sure that I got them through their bath and through their bedtime rituals. So I make sure and leave here 5:30 at the latest, and I make it home to be with my kids. I have a blended family. My husband and I, we're best friends. We have a great relationship. We have a lot of love and respect for one another. It's a dream come true. It's actually a dream I never dreamed because I didn't think it was possible.
You know, buying and owning a home, it's a dream, right? We all want to have that. Even if we have a home, gosh, it's, you know, you want to have a better one. You want to have a lot of stuff. And especially as bankers and credit union representatives, you know, we feel this keenly in our community, and we want to provide these services and help you because it is such a big deal and it's such an important thing. And so anyways, as I go through and talk about a few points here, keep in mind that if you have questions, if you have some feelings about home loans, they're not out of reach of anyone. There's things that can be done for any situation, and we're always happy to help with that.
I have a
So,
question.
yeah, go right ahead.
So how long do banks want a person to be at a job before they're comfortable with giving them a loan on a house?
You know, and a more important question than that really comes around income. And depending on the job that you have, some folks will have a new job, but they've just come from another job where they were at that job for 10 years.
Mm-hmm.
Some folks will come into a job, maybe it's their first real job, and I say that real job, maybe because you just spent the past few years in school learning and developing to get to the point where you could get that job. So how long you've been at that job really could vary when it comes down to qualifying. What's really more important is how the income works and how we can verify that income that comes with the job so that we can help figure out what kind of a payment and loan we can get you qualified for.
And then what is the percentage that banks usually want you to have as a down payment? Because I've heard it can be 3, 5, 10. So I want.
Yeah, you're kind of getting ahead on me here, which is great. I love that. No, that's wonderful. I'll just hit that one head on. We'll just skip it as we make it through. But generally, what credit unions and banks want you to put down is 20%. That's the standard. If you do less than 20%, there are a few things that will happen. First of all, there is something called PMI, or private mortgage insurance. And basically, it will be included in your payment, but you will be paying for, it's basically an insurance policy for the bank or credit union in case you aren't able to make your payments. So it helps cover a little bit of the down payment that you didn't provide. Also, there's several guarantees that you can get out there that can help you with a lower down payment. One of them is through the government Federal Housing Administration, FHA, which can help you do a 3%. They do have a private mortgage insurance, but that can really be a benefit to folks that really would like to put money elsewhere besides into the home when they're first buying it. But there are some that even go as low as 0 down.
Okay, so that's why I've heard 3 and 5%. Okay.
Yep. So yeah, generally, if you're not putting 20% down, be prepared to talk about private mortgage insurance and how that will factor into your payment. Because it's not as easy as looking at a home and saying, okay, I've got a loan payment of X, because you do need to take into account, do I have to pay that PMI? Will that add into my payment? And of course, your taxes and insurance are something that are taken into account in your house payment as well. Those are things you have to pay no matter what, but that will usually make that payment look a lot worse than it really is. But there are things that need to be paid in that payment. But yeah, there is some flexibility there. The other thing to take into account with that payment is, I just forgot where I was going with that. That's okay. Let me start over here. We'll come to it here as we go. Just out of curiosity out there, how many of you are currently own your own home? By a show of hands. I see one there. Got a thumbs down. I got it. Well, tell you what, renting is not necessarily a bad thing. There are a lot of people, especially when you're going to school, sometimes you don't exactly know what the future will hold for you. So renting an apartment or renting a home can be a very useful way to have a short-term place to live, a place to call home, without committing a whole lot of money and resources and locking yourself into an ownership of a home. So it isn't necessarily a bad thing, but once you reach that point where you're ready to make that dream come true and actually put the money out and buy that home, that's when it's time to really look at those benefits. When you're renting, you're putting money in your landlord's pocket, and that's the way it goes. But it's nice when you make a home loan payment. Part of that payment every month is building you value in your own home. There's part of the loan that goes against your home, and the other part of that is what we call equity. One of the misconceptions people sometimes will have with their home is they think since they have a loan on it that the bank owns it. And that's really not true. Banks and credit unions just put what we call a lien against the home. If you don't make your payments, that gives us the ability to come negotiate some alternatives. But really, you own your home from day one. Your name is on that title to the home, and it is yours, even if you have a loan against it. And it's really a cool thing to think about, that it's a very expensive asset, but it's yours, even if you're making payments. And part of that payment every month that you're making is going towards making it more and more yours, free and clear. I think that really kind of covers it. But that equity, as you pay down more, you get that loan lower and lower. The value of your home will generally keep increasing. So the difference between the loan and the value of your home is what is called your equity. And that's the part that you have money in the bank. If you sold your home for the value that it's worth, that's money you could put in your pocket. And buying a home is one of the best ways to be able to build that kind of wealth, whether it's just the home you live in or buying homes to rent out. It can be a big way for you to build that kind of value and income. Let's see here, Bertha, or it's 6:30 is when we're calling it. Okay, I don't want to get too wordy here. Let me click over. I think we kind of covered a few of these already. One thing to point out real quick on lenders, when it comes time to buy that home, there's basically two types of lenders you can go to. A mortgage broker will basically work with several different banks and credit unions to find you a loan, and they can be very useful in finding the best possible deal. However, they never usually will keep your loan. They'll sell it pretty immediately. So you won't end up doing business with them. You'll be doing business with another servicer, sometimes not very local. Local credit unions and banks are very good about keeping that servicing local, so you don't get sold off and wonder who you're working with. But on the con side, sometimes there's very few programs, just the programs offered by that institution. So you're a little more limited. So there's pros and cons to both, depending on what you're needing the most. And it's good to possibly talk to both and compare and shop a little bit to see where you can find the best possible options. One of the things that to look for when you're shopping is you'll be quoted rates, and they will be quoting you what they'll say is the APR, the annual percentage rate. And the important thing about knowing what an APR is the institution will take the rate that they are charging you for that loan and put in all of the costs and fees that you will be paying for that to close that loan. So when you look at an APR, it gives you a real cost figure of what you're going to pay. So in other words, if one lender says, hey, we've got an APR of 3.5%, and another one says, I have an APR of 5.5%, that 5.5% one is where you're going to pay the most to get your loan, even if they're offering a better interest rate than the one that's charging you 3.5. So that can be a very useful way to compare loans, apples to apples, straight across. And there are different programs. Everyone talks about the 30-year fixed, having a loan and interest rate that will last for 30 years and never change. And that's a big value. However, there are rates out there that will change, but they can start very low and help you to qualify for a better house. And if you're not planning on living there for very long, most people live in their home 5 to 7 years. Having a shorter term lock-in, like a 5-year interest rate, might work better for you. It'll give you a better payment, and then you can sell it and move on when the time comes. So it's a good thing to discuss with your banker or credit union rep, what goals you have and how that would affect the loan that you're trying to get. Let's see here. I think we've covered some of this, but real quick, a biggie for you, just like the car loan. Whenever you're ready to start looking to buy that home, come on into your credit union or your bank and let us put together a pre-approval for you. Again, knowing how much you can afford when you're going out to buy a home is a really big deal. It's kind of hard to go out there sometimes and find this home you really love and then find out that you can only afford half the cost of that home. It's really better to know up front just how much you really can afford, so you can really keep your ideas realistic and help you to shop better as you're out there. Let's see, we talked about these. The last thing here, that I've got is closing costs. Now, we talked about the down payments, and that is a consideration of how much cash you've saved up to be able to contribute. But bear in mind, even if you get a zero down program, you're still going to need cash to pay closing costs. Closing costs are the actual costs and fees incurred in setting up the loan and transferring the ownership of the house from the seller to the buyer. And there's lots of things that go into those, and they can range anywhere from $2,000 or $3,000 to $6,000 to $8,000, depending on how much home you're buying. So it's really good too to know how much you're facing in closing costs up front, not just down payment, so that you have a real idea of what kind of cash you'll need to bring in to be able to actually get the home that you're looking for. Let me see, do we have another message here? Speak on how taxes relate to homeowners. My mom recently purchased a home. She needs to pay the taxes. That's a very good question, Michelle. So the taxes that you pay on your home, I remember I called once down to Yakima County. There was someone that came in to get a loan, and they said, no, I don't get taxed on my piece of property. And I said, really, you don't get taxed? We called the county assessor, and it was so funny. I asked her, I said, this person says they don't pay taxes. I'm just curious, is that true? And she stopped me and she said, son, we tax every sand grain of this county. That was her exact words. And it made me laugh. That's the way the county is. They account for every bit. So yes, there are taxes on every piece of real estate in the county. And the best way to find out about how much is owed and what kind of arrangements can be made is to call the assessor's office directly and be very honest about the situation that you're in and let them tell you what can be done. The last thing they want to do is take radical action. The county doesn't want to own your home. They don't want to take it away. They don't want to put liens on it. They want to find a way to help you to pay the taxes off. And sometimes you can get a loan or maybe refinance your mortgage to be able to get those taxes covered as well. So look into the options with the county and then with your financial institution to find out what can be done. Does that help out?
Yes, thank you.
Good deal. Okay. I think we are about at time. Real quick, one more question for one more Starbucks gift card we'll throw out there. Let's see, I got a few here. Let me pick the right one. So what can you get at your bank or credit union that will help you to know for sure how much home you can afford? What is that called? First correct answer. Good guess. Not a credit report. It starts with the word pre, though. Oh, hell yeah. Yes, you got it. All right. Oh, what do you think, Zach? Does she get 2 gift cards or should we ask another question?
Maybe we should open it up for one more question.
Sounds good. I'll do one more. And this isn't a hard one, so you got to be fast. What is the word that we use for the money you pay when you're buying your home that reduces the size of your loan and your payment? See if anyone can get that one.
Can you repeat that again, Andrew?
What is the word for the money that you pay when you buy a home that reduces the size of your loan and payment? It starts with down. All right. Looks like Michelle got it. All right, Michelle, give us your, I guess we got your full name on there, but give us your email address on the chat there and we'll shoot you out a card as well. Awesome. Any final questions? If you have any further questions and maybe you were a little reluctant to ask in a group setting here, feel free to come into your bank or credit union and ask those questions. We'd be happy to help you. It's been a pleasure talking to you tonight. Thank you very much for having me.
Thank you so much, Andrew and Zach, for participating with our financial literacy celebration month. I did want to share before we head out with the group here today. Can you guys see that? Okay, perfect. So just a reminder, these are the we have one more session tomorrow from 3 to 4, how to manage your credit cards. I know some of you had questions. So join us tomorrow, same link from 3 to 4. And if you guys want to know more information about financial literacy, we do have a website at YVC. I'll be putting that in the chat here shortly. But this is what it looks like. And we also post our future events on here. And then we're also going to be creating a library where we're saving all these sessions where you could go back and check out the information that was shared. And then also another thing to know is our college offers a platform called Cash Course, where it reviews 6 different topics about financial literacy. It's budget, savings, credit, different things. It's free for you. So where that green arrow's at, you're going to click on register free for today. And that is totally free. You can do self-paced. And if you have any questions, you can reach out to the email below on this webpage. And again, we want to thank our presenters, Andrew and Solarity, and our partner, Zach, as well. And all of you guys who are here today. Thank you.